Hi there, welcome to Kneppy Invest. Continuing on my June quarter Appendix 4C video series of covering every single company that it did achieve an operational cash flow positive quarter, I turned my attentions to a company called hipages. This is a relatively new company on the ASX. We only have 3 quarters of history. Also have a look at their financial year 21 results as well. So let's get stuck into it and look at some facts in regards to hipages. Before doing research for this video, I didn't know much about this company, and all they do is they have this online platform trying to connect homeowners who need jobs done and tradies who want to do those jobs. And because one of my dividing fences I have on my property does need replacing, I thought I would try out hipages just to see what it is, what the process is, getting these quotes and that sort of thing. Now, my first impressions were the costs. Now, I do know fencing is like per meter, and my expectations based off some other quotes I did get were between about $20 and $30 per meter. And the lowest I did find on hipages was about $70 per meter. Now, that's could be just a one-off, but I have read some reports that hipages is a little bit more expensive, the quotes you do get from this platform. There is a bit of competitors out there, so this is not the only website or online platform that does this. Even a company I did a video on last week, Airtasker, is sort of the same lines as hipages, a little bit different, but you could use both to get quotes for any jobs you don't or want done around the house. hipages was founded in 2004 by 2 guys, including the CEO of the company, Roby Sharon Zipser, and another guy called David Vitek. I think they were childhood friends. Didn't start out as trying to connect homeowners and tradies or something else, but that's what they gravitated towards. They listed on the ASX on the 12th of November 2020, so not quite 1 year listing, but it has been about, we'll say, almost 10 months. And that is a long enough time to get a good feel of how a company is performing. And Roby Sharon Zipser, who is the CEO, he has about 5.8% shares in this company, so a little bit of skin in the game. Interesting to note, the largest shareholder of hipages is News Limited with 26%. They have holdings in 3 main companies, hipages, REA, and I think it's HTI, if I remember correctly. Other 2 significant shareholders, maybe not the most significant shareholders, but Challenger has 6%, and they've taken a stake recently, and Australian Ethical Investments, they have a 5% stake in this company as well. The market cap of hipages is $491 million at a share price of $3.78. That valuation has gone up quite a bit in the last month or 2 months because the share price has really taken off. The ticker code for hipages is HPG. Now let's look at some of the results for the financial year 21 and some other metrics that I found interesting. Maybe you won't, maybe you would like some other metrics here. But revenue up 19% from financial year 20 to 55.8 million. They are operational cash flow positive by 12.7 million. That's up 38% from last year. Profit after tax, net profit after tax, 1.2 million. They are profitable. That's up 128% as well. I try to focus more on operating cash flow than net profit after tax. And one of the reasons I do that is I want to see if these companies can produce cash in their business. And then I'll look at the amount of money they do spend on investing and financing activities. So the first focus I'd usually go to, or the part of the financial statements I go to, is the cash flow statement, and then I work my way backwards. Some of the other metrics that I'm not sure exactly what you need to look at here for this sort of company, but job volume, 1.53 million, up 12%. And subscription tradies, so these are tradies who do subscribe to hipages, that's up to 31,200, again, up 12% from last year. Monthly recurring revenue, 5.2 million. And this time last year it was 4.1. Just times that by 12, you get about $60 million of revenue, which is almost in line with the revenue they did report for financial year 21. So that makes sense. And that is increasing. Exactly what you want to see for this sort of company. Now I'm going to focus on the previous two Appendix 4Cs for hipages, beginning with the March quarter, and then I'll look at the June quarter results in the next slide. Really going to be focusing on receipts from customers. We're also looking at the trend in receipts in 2 slides' time, but because this company hasn't been listed for a long time on the ASX, we don't have a large sample size there, but we still can see if receipts are growing or diminishing through time. So the main thing I am looking for in the Appendix 4Cs is whether the company is operational cash flow positive or negative. Receipts for customers in the March quarter for hipages, 15.2 million, and they were spending $3.7 million on advertising and marketing, $4.1 million on staff costs, and about $3.4 million on administration. The spending on advertising and marketing does make sense because they want more tradies to sign up to subscriptions. They also want more people to use their online platform, and they do have to spend money to do that because there are competitors in this space and they want to beat their competitors in the medium to long term. But overall, the costs in this business is not as large as the receipts from customers. And that means the company was operational cash flow positive for the March quarter by $3.8 million. And that's very important. That means the management of this company can fund future growth through operations. They don't have to raise capital. They don't have to borrow money from banks or financial institutions. This is a very important point at which hipages is right now. Now it's up to management to use that cash they are generating in operations wisely. And the question is, can they do that? Now overall, because they aren't spending a lot of money in financing and investing activities, they do grow their cash on hand in the overall business from 29.2 million to 30.5 million. So now let's go to the June quarter to see how this company progressed over the next 3 months. Although receipts for customers did increase by about $300,000 from the March quarter to 15.6 million, and although staff and administration costs were unchanged relatively from the March quarter, hipages did spend about $1.3 million more on advertising and marketing, increasing that from 3.7 to $5.1 million. That means the company was not quite as operational cash flow positive as the March quarter, decreasing from 3.8 million to 3.1 million, but they were still operational cash flow positive. That's very important. The other thing I should mention is they did spend $1.7 million on non-current assets and $1.6 million on IPO stuff. More than likely that's a one-off, and because the amount of investing and financing activity costs were about $3.3 million, which was more than the operational cash flow, the cash on hand in the overall business fell by $200,000 and finished the June quarter at $30.3 million. But that's still a good thing. They still have plenty of cash on hand, no debt, and this means the company's management has a lot of flexibility on how they can deal with that money they do have, and hopefully they use it wisely for organic growth initiatives or maybe inorganic growth initiatives like acquisitions. Always like to look at receipts history for a company. Unfortunately, we only have 3 quarters of history here, so not a high sample size. I would prefer at least 2 years or 8 quarters of history to get a good gauge of how receipts are moving, if there is an uptrend or a downtrend. Initial signs are good for hipages. We have seen 3 quarters of growth, increasing from 15 million to 15.6 million. The question is, can this continue in the future? So I wouldn't make an investing decision based off the cash receipts history just yet. As we move on to the daily chart for hipages, the market has become quite a bit interested in this company over the past few months. The share price is in a well-defined uptrend, and that uptrend was formed around April, May, when the share price went to a low of about $2 in March. The IPO price was around about $2.50 in that range. And since that low of $2 in March or April, the share price has increased to a current price of $3.78. So it's almost doubled in the past, say, 4 or 5 months. And we are at an all-time high right now on the last day of trading, which was on the Friday. I can't think of the date. What's the date? The 3rd of September. And it does look quite bullish at this point in time. So the market is loving this company. The one negative thing about what's happening with the share price is that is not coinciding with an increase in volume. So even though there's not a lot of selling, there's not a lot of buying either. And just because the buying is a little bit more bullish than the selling, that's the reason why the share price is going up. I would prefer way more volume coming in. That would give me confidence that this movement up is a long-term movement, or has the potential to be a long-term move to the upside. If you do like this series of companies that did achieve an operational cash flow positive June quarter, look out for videos on these 4 companies in the next week or week and a half. Kneppy, one of my favorite companies right now on the ASX, and there is a reason behind it. And look out for that video because I'll be talking about why I like them. And even the market has loved that company ever since they released their financial year results. On the 26th of August, the share price has gone up almost 40 to 50%. 2 other companies, Karoon Energy and New Century Resources. I have had a history with New Century Resources, and I am becoming a little bit more interested in that company because the share price has fallen. I do think there might be some value with that company. And the final company is Dynamic Drill and Blast, which is, naturally enough, a mining services company, which is quite obvious from the name of that company. So look out for videos on these 4 companies over the next week and a half. That's all I have for this June quarter Appendix 4C and financial year 21 video for hipages. If you do have any questions about this company or any other company on the ASX, leave a question, comment, or just the opinion in the comment section of this video. And I read anything. Might take me a little bit of time to get to your comments. So if you do want me to answer anything, there is a potential I might not get to it for quite a while. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Talk to you later. Bye.